Hello, and welcome. Today, we're discussing an important topic that impacts both tax professionals and business owners: managerial remuneration and its implications under the UAE corporate tax system. As of the Federal Decree Law No. 47 of 2022, corporate tax compliance is becoming increasingly complex, particularly when it comes to how executive pay is managed. Whether you're a tax professional advising clients or a business owner structuring your company's remuneration policies, understanding this law is key to avoiding pitfalls and staying compliant. So, what exactly is managerial remuneration? In simple terms, it's the compensation given to key people in the company: owners, directors, officers like the CEO or CFO, and other senior management. This can include salaries, bonuses, stock options, and other incentives. However, in some cases, related parties, such as family members in senior management, are also included in this category. Why is this important for tax purposes? In the UAE, tax authorities are scrutinizing how businesses categorize management remuneration, particularly when it's used as a means to reduce taxable income. For instance, reclassifying profits as excessive management fees to reduce your corporate tax bill won't fly under the new law. Article 33(4) of the UAE Corporate Tax Law specifically makes dividends and similar payments to owners non-deductible. This means businesses can't just use management fees as a tool to avoid paying taxes. The law is designed to prevent the erosion of taxable profits through excessive or unjustified compensation. Now, let's get into the deductibility rules for management remuneration under Article 36 of the law. To qualify as a tax-deductible expense, managerial payments must meet three key criteria. 1. Need for service. The company must show that the compensation is tied to a legitimate business need. The executive's role must contribute to the company's success, and the remuneration should reflect that. 2. Receipt of service. Proper documentation is essential. This includes employment contracts, performance evaluations, job descriptions, and other records that prove the services were actually provided. If tax authorities ever audit your business, having this paperwork in place is critical. 3. A market value alignment. This is where things get tricky. The law requires that management compensation be aligned with what a third party would be paid for the same services in similar circumstances. So, it's essential to benchmark your executive pay against market standards to ensure it's defensible. Payments above market rates may be disallowed for tax purposes, leading to compliance issues. So, how do you balance competitive remuneration with tax compliance? Here are some strategies that both tax professionals and business owners can use. 1. Benchmarking. This is one of the best ways to ensure that management remuneration aligns with market norms. Conduct market research to compare your compensation packages with those of similar companies. This not only ensures fairness, but also strengthens your position in case of a tax audit. 2. Consolidate benefits. Instead of itemizing things like housing allowances or education fees, consider bundling them into the overall compensation package. This simplifies the structure and makes it easier to defend if questioned by tax authorities. 3. Introduce long-term incentives. Offering stock options or equity that vests over time can align the interests of executives with the long-term success of the company, rather than short-term gains. This also demonstrates that the company isn't using remuneration to manipulate tax outcomes. 4. Establish transparent compensation committees. For larger companies, setting up an independent compensation committee, whether internal or with external experts, can provide impartial oversight. This ensures that remuneration decisions are fair, transparent, and in line with industry standards. Transparency not only helps with compliance, but also builds trust among stakeholders. In conclusion, managerial remuneration is a complex but vital aspect of running a business in the UAE, particularly when it comes to tax compliance. For tax professionals, advising clients on how to structure executive pay in line with Articles 33 and 36 can mitigate risks and prevent costly disputes with tax authorities. For business owners, Being proactive about structuring and documenting executive pay will protect your company from future compliance issues. Thank you for your time today. Whether you're advising on tax or running a business, it's essential to stay informed and compliant in this ever-evolving regulatory landscape. If you have any questions or need more guidance, don't hesitate to reach out.